Good evening. I'm Dan Fitzpatrick here at StockMarketMentor.com on Monday, December 16th. And in this free video, shouldn't take too long, I just want to look at this trucking stock. First of all, members, we'll let you know the strategy session is particularly long tonight. There have been a lot of requests for different coverage in stocks, so I'm going through those. And then just generally speaking, there's a lot of stuff happening in the market. So we want to make sure you're in the right stuff and you're out of the wrong stuff, and you're also learning and understanding what you can and can't control. And I'm going into a lot of detail tonight in that, so please be patient, okay? And use the double speed function. Truly, it does help. The brain thinks faster than I can talk. That's for sure. Okay, here with YRCW. Why am I looking at this? I don't care about any of this stuff. I mean, we've looked at this on the way up, looked at it on the way down. What I care about is this. I care about this here. Now, the stock moved. Let's just do the math. From, we'll say, down here, this low here. Okay, it's moved up 76, 77% in less than a month. Okay, that's a monster move. It doesn't have to go up and tag the 200-day moving average. I mean, you know, it'd be nice if it would, I guess, right? 1608. Well, what's really the relevance of the 200-day moving average? It was relevant back here as support, but not particularly relevant here other than just being a line that the stock fell through. What's the relevance of the 50-day moving average? Not particularly very much, other than the line that was also forming support here, and the stock gapped through down here, never touched here, and that ran up here, right through here. So what I'm saying is the 200 and the 50-day moving averages, both of which, you know, I look at a lot. You know why? Because everybody else does, and I want to know what the heck everybody else is seeing. They don't really matter here. What matters to me, let's stretch this up, is the volume. These two big days, like big volume days. Okay? Big move up on Friday, like massive move, huge move on massive volume. Opened it near the low of the day, closed near the high of the day. Okay, today, almost as much volume, but not quite. But let's call these the Twin Towers here. We got a couple of big days here right in a row, big massive volume with the one big difference. Here, well, we got a couple big differences. Okay, so the stock gaps up, trades high. Oh my gosh, you got to get this stock before it gets to 16 bucks, and then falls down. So unlike on Friday when the stock got off to a good start and kept going all day long, today, stock got off to an even better start. It gapped up and went all the way up until the time that it didn't. A little bit like a rocket ship gone bad. So you could see what happened. First thing in the morning, 5-minute chart, bing, gap up and go. And after that, the stock just really has been petering out. So what's the point? The point is you want to recognize this kind of stuff because you got to know when to sell. Okay, look at the volume here on Friday. Big, massive move. Big volume. Here. Big volume here. Big, massive move. Okay, but this was, to me, looks to me like kind of a capitulation. Capitulation of the sidelined bulls, those that thought the stock was going higher but couldn't bring themselves to buy it. Finally, they bought. Those that were short, not a big short interest at all, so I don't really think that matters, that finally covered. Bottom line is everybody that wanted to buy the stock into this uptrend bought. Now, suddenly, they don't want to own it anymore. So here's how you make this trade. Would I short the stock? I kind of have a hard time doing that right now, but if I had to go long or short, I would actually short. And I would go short with a buy stop right above today's intraday high. Intraday high was 1439. Again, I'd totally forget about the 200-day moving average. I'd say if this stock goes up to like 1440, I'm out of here. I mean, I'm literally saying like keep a super tight stop on this thing. And I would look for it to move lower. But if you're still long the stock, hey, you better hope that a guy like me is going to get stopped out. Because if it doesn't happen, if this stock doesn't move up into this green bar like first thing tomorrow morning, you're probably going to see this pull back. So learn to look for these types of things. They're these exhaustion moves. They don't happen often, but when they do, a lot of times you'll be able to make some money off of them. But it's not just the candlestick that matters, it's the volume that accompanies it as well. So, okay, that's it for this strategy or this free chart of the day. By the way, if you haven't tried Stock Market Mentor on the free trial, well, you're the one, because everybody else is over there. So you need to get over there too, okay? Stop being a square. Stop being an outcast. Join the party. We're fun.